The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to Knockout Options and Binary Options, getting started at Nadex. My name is Todd Rich. I am part of the education team at Nadex, and I'm going to be taking you through this session today. And it is an introductory session on understanding what these products are, and then I'm going to take you in, much like uh, someone can give you a recipe, and you can go, great, I got this great recipe to bake something. But if you're not comfortable in the kitchen, you like to watch a cooking show to actually see how it's done. We're going to get into the platform and actually show you. I find that's the easiest way to grasp some of these concepts. Um, let's Before we get into knockout options and binary options, I do have a couple of housekeeping items that I do need to take care of. And there we go. First, this webinar, as are all of our webinars, are brought to you by our compliance department. And trading on Nadex does involve risk, and you are responsible for all of your own trading decisions. The one thing that I really would like to point out right now is I am going to be going through some real examples, and I don't want you to construe anything I say today as a buy or sell recommendation. I am doing this strictly for your education purposes. Now, what are we going to do? I like to go through knockout options first. The reason I like to do that is because I find that they are the most intuitive, and even though you might not know what they are, when I show you, you're going to go, of course, I get it. They're very easy to understand. So are binary options for that matter, but there's a subtle difference between the two. So it's actually, I mean, not so subtle, a distinct difference between the two. And I'll go through that, and then I'm going to show you how we're going to do this on the platform. Uh, Before I jump over there, this is an interactive session. Uh, there is a questions box, so please, I've got my colleague Nelson in the background. If you've got any questions as I go through this presentation, if you've got questions around your account or the platform, or I go through something too quickly, please ask questions of Nelson. He heads up our service team. He's an expert. Engage with them. Keep him busy while we do this. But at Nadex, we are here to help you. So if you want to give us a call, you want to email us, there's our phone number, our email address, and again, interact with Nelson on the questions box. He's here to help. I'm actually going to show you one other way, because when we want to get into talking about knockout options and binary options, I am going to do it all from the platform, which is on our website. But before I do that, I would like to point out this relatively new function that we've got at Nadex, and it's this chat box down in the right-hand corner. Some people haven't noticed it yet, but it's just yet another way. I'm going to click on it and bring it up, and you'll see it pop up. Yet another way for you to interact and get some help from Nadex. Again, we are here. We want to make ourselves as available to you as we can. Any questions, please. The other thing I would like to point out before I get into the session, because it's next week, and if you don't go to our webinar section of our website, you'll always find our on-demand content where we record everything. This is being recorded and it'll be up here. You can also find it on our YouTube channel. But specifically, I want to put a plug in. Next week, we are running a virtual education summit. It is a full-blown 2-day in sessions that, if you're new to Nadex, you can go through all of them. Each day is 4 hours long. You can come and go as you please, but register for them. Here, I'm going to go ahead and click more on day one. I am going to start it off with just the basics of binary options, different than I'm doing today. My colleague will take a little break. Uh, Dan Cook is going to do the same for knockouts. Again, different and a bit deeper than what I'm going to be covering today. We do have some third-party partners that are strong educators. We have Brian Caprice from Keep Trading Simple, who's going to be doing some introduction to technical analysis. I'm going to touch on some of that today, but if you don't know anything about technical analysis, let's start learning those key terms and how you can start to learn how to read charts. And then I am going to be doing a session that is probably similar to today, where I'm going to get on the platform. That's just day one. Day two is much more advanced. I'm going to get into a deeper dive on the advanced concepts in technical analysis. I'm actually going to show you how you can build some of your charts with some of the more commonly used analytics and indicators, things like moving averages, trend lines, support and resistance. I'll even probably, and I might even show this one today, just how to do a Fibonacci, but I'll go much more into depth. And then we're going to go into some strategies using average true range to potentially identify entry and exit points for some of your trades on Nadex, a hardcore, a little bit deeper dive into a knockout option strategy. And then lastly, my colleague Dan Cook is actually going to talk about doing strangles with binaries. You don't just have to trade one at a time. You could do multiple binaries at the same time and craft some particular strategies to your taste. So I did put a plug in there for the Nadex Virtual Education Summit next week. It's next Wednesday and Thursday. Please go to our webinar section and sign up. All right, so apologies for that plug, but I thought next week you might really enjoy it. Let's get into today's session. I am going to log into the platform, and you'll notice where it says join the beta. I would encourage you to use our new platform. We are going to be migrating to this for everyone soon. And that I like to show you this. I think it's a much cleaner, simpler, easier and more intuitive interface than our current platform. And I think you'll like it, which is why I use this. All right, when you log into the platform, notice one that I am in a demo account. I do want to highlight that. We do have a demo account. If you haven't traded at Nadex, I would encourage you. In fact, we find people are much more successful when they start in a demo environment and get comfortable with the platform and the products before a live account. But because of that, some of the prices we see might be a little different than what you would see, and the experience in a demo environment is going to be different than a live environment. But it will be close to it, but just because there's different participants in a demo environment than a live environment. But I did want to point that out, and if you don't have an account, I would encourage you to open a demo account. When you first come into the platform, you'll notice that it is broken into three sections. There is the section on the left, this panel on the left, where we have our products. There's your positions at the bottom, and we will be looking at all of these as we go throughout the day. And then the workspace, which is where your chart and your order ticket's going to be. Right now, we haven't done anything yet, so that's why it's empty. As I said, I was going to start with knockout options. Now, I clicked on knockout, and you'll see that we do have knockouts for indices. And in fact, if I click on it, you'll see that we've got them for the S&P 500, the Russell 2000, the NASDAQ, and for the Dow Jones, which is what those products all are. We've also got them on on these different currency pairs. So if you want to do them on foreign exchange, we've got them there as well. And then commodities, these are relatively new. We've got knockouts on both crude oil and gold. And this is actually probably where I'm going to take my example from right now, because crude oil has been so hot and so popular. And interestingly enough, with the volatility in the oil markets, some other more traditional brokers actually cut off access to their customers to trade oil because they couldn't manage the risk. Well, with knockouts, because they're all defined, you've always been able to trade the price of oil at Nadex. So what is a knockout? I am going to I clicked on this and dropped down, and you'll notice for each product, we've got 4 different knockouts. Again, I keep using that word, but I'm going to show it to you now because I think it's easier. I'm just going to click on one of them just for fun. And I'm also going to go ahead and hide that, give us a little bit more screen real estate. In fact, I'm going to hide the positions page as well. When I clicked on it, you'll see that I got a chart of the price of oil. Okay, and it's a 10-minute chart right now, and not that that really particularly matters, but just so you know what you're looking at. Now, what is a knockout? When you trade a knockout, you are trading the price of the underlying asset. So when we trade a knockout, and if we wanted to trade oil, we are trading and this does settle to a futures it settles against the price of the futures contract. We are trading the price of a barrel of oil. All right, what is oil trading for? Right now, oil is trading, and you can see the indicative price up here on the order ticket, 32.88, right? I'm rounding it off, 32.88. Now, oil, I mean, we had that little episode where oil traded down below zero, and that can happen. With a knockout, your risk reward is always known upfront before you even get into a trade. What are we looking at? With a knockout, because I'm trading the price of oil, there is, with every contract, a floor, that's the dark blue line below, and a ceiling, a dark blue line above. Those are the levels where you would get knocked out of a trade. It's the protection around your trade on the price of oil, whether you're going long or whether you're going short. I'm going to pick, notice on the left-hand side of the chart, I've got 4 different blue lines which represent each one of the 4 knockout contracts. I'm going to pick one where oil is sort of in the middle. Yeah, we'll stick with this one. Where it's sort of in the middle. And notice that it tells me on the chart, it's the 31 is the floor and 36 is the ceiling. Okay. And the question that you're trading is, do you think oil is going to go up or do you think oil is going to go down? On the knockout, you'll notice that the prices that you're trading are right around the indicative price. So when I see oil's trading at 82.86, roughly 32.85, I'm sorry, 32.85, notice my bid-ask spread is right around 32.85. Okay, so you're trading the price of oil. If I think oil is going to go lower, I can sell one of these contracts. When I click sell, if I were to sell one, and I'm not going to make this a market order, I'm going to make this a limit order, and we're going to make this, that's fine, 32.85. If I were to sell one at 32.85, and let's go ahead and place this order, I'm just going to put one in the market. Notice when I hit place, I got a confirmation up top, and in fact, oh, look at that, it actually traded. Yeah, I actually traded that. It's now in my positions. It was an order, and now it's in my positions. And notice that I placed that between the bid-ask spread and somebody traded with me. So interesting there is that you don't always have to sell the bid or buy the offer. You can trade in between. Now, when I sold one at 32.85, I am predicting I want the price of oil to go lower. If oil trades down and touches 31, I would be knocked out of the trade and I would recognize or I would see my max profit of $185. I wanted oil to go lower. I sold. And if it goes down and touches 31, and by the way, these are weekly contracts. So this contract expires in 2 days and 2 hours. Notice that in the chart. It's also on the order ticket. If oil were to go down and touch 31, I would get knocked out of the trade and I would recognize my maximum potential profit. If, however, oil were to go up and it hit 36, the ceiling, I would get knocked out of the trade up there, and I was wrong. And my maximum risk is if it does go up to 36, I could potentially lose $315. So essentially what that 36 is if I sold, it's my stop loss up above where I'm knocked out of the trade. And the 31 down below is my maximum profit where I would exit for a maximum profit. Now the question then becomes, what happens if oil doesn't touch uh, one of the floor or the ceiling, my profit or loss on this trade would be the difference between where I bought or sold it, here I sold it, and where it settles at 2:30 on Friday. If oil were to settle higher than 32.85, which is where I sold it, I would lose money, right? But I know that I can't lose any more than 315 because I would get knocked out if it went all the way up to 36. If it only went up to 35, I would still lose money. I would only lose, actually, I would lose $215. Now, on the other hand, if oil were to go lower, all right, and it doesn't touch 31, I might not make a whole $185 in profit because that's my goal. But if it were to go below and settle below 32.85, I would make a profit. The difference between where I sold it, 32.85, and where it settles, somewhere between 32.85 and 31. So when you're trading a knockout, you really are just trading the price of the underlying asset. I'm trading the price of oil, and I can buy it if I think it's going up. I can sell it if I think it's going down, and I'm knocked out either up above or below at known levels. That is exactly where I would get knocked out of the trade. Now, just because there's an expiration associated with this contract does not mean I have to wait until expiration to see what happens. If oil, it's rallying right now, and let's just say I decided, you know what, I'm wrong. I made a mistake. I didn't want to sell it. I could just go ahead and buy it back right now, and I just did, and just say, fine, I I, I was wrong. And we can go down to my history here. You could see that I bought it at 85. I mean, I sold it at 85. I bought it back at 97. I lost $12. All right. I want to admit my mistake now and go ahead and cut my losses. So that is true either way, right? So if it goes up, if it were to keep going up and I wanted to get out of the trade, I mean, it keeps ticking higher. Maybe now I actually think it's going to keep going higher and I want to go long. Let's go ahead and just buy one. I'm just going to go ahead and, all right, I just turned the trade around. I got out and now if you notice, I've got a position where I'm long one. Now, because I bought one, all right, I bought one at 32.98. I'm looking for oil to go higher. And now notice my max profit is if oil actually went all the way up to 36, I could potentially make 302 on that trade. I bought one. I want oil to go higher. And if it goes up to 36, I would get knocked out for my maximum potential profit. Now below, if it were to sell off and hit 31, I would get knocked out of my long position and I would lose 198. So this is why I like knockouts. They're pretty straightforward and intuitive. I am making a trade around the price of the underlying asset. I can either buy it and go long and look for the price to go higher. I can sell it, go short, look for the price to go lower, but I know where I would get knocked out on either side before I went into the trade. So I know what my maximum potential loss is, and I know what my maximum potential profit is. And if it doesn't hit one of those boundaries, right, it doesn't hit the floor or the ceiling, the profit or loss on the trade will be the difference between where I bought it or sold it and where it ultimately settles. And then because you can see on the chart all the different levels of the different knockouts, you can choose which risk reward profile works for you. If I thought oil were going lower and I were going to sell and maybe give myself some more room to the downside to potentially profit, this might be one that I would want to use where the boundaries are, the floor is 29 and the ceiling's 34. So you can pick your risk reward profile before you get into the trade and analyze it beforehand by clicking on the different knockout ranges and whether you're buying or whether you're selling. Now, I do like to show this as well. It's kind of nice since we're here. We're on the charts. We do have some great charting functionality. I will do a much deeper dive in the virtual summit next week. But just so you know, you can customize these charts. The charts on the new platform are are pretty strong with some functionality. Let's give myself, we're going to go to a 5-minute chart, and we're going to scrunch it up a little bit. And I'm just trying to give us a chart here. You can, if you're looking and you're doing some technical analysis and you wanted to look for some levels, we do have on our charts indicators. When I click on indicators, it would bring up all of the different indicators that you can populate the chart with, whether you use moving averages, whether you use moving average convergence, divergence. If you're not familiar with these terms, we do have the little information button where it can help you understand what all these indicators are. Um, but you can put them on your charts. Let's take a look. A lot of people like to use Bollinger Bands, which is about standard deviation moves and measurements. I click on Bollinger Bands, it will, and now let's zoom in a little bit, and I'm going to make this chart a little, and you'll see where it trended along this Bollinger Band before it finally retraced back to the moving average. So I mean that's part of what the Bollinger Bands do is it measures where you start getting to extreme moves away from the moving average, looking for it to retrace back to that. And it does give some strong levels. Again, I'm not telling you to buy or sell or use any of these indicators. Specifically, I just wanted to show you that they're available. We also have some drawing tools that are available. You can draw your own support and resistance or trend lines as you see fit. If we were to actually look at a little bit longer of this, and let's go ahead and take off the Bollinger Bands for a second. And I wanted to just draw a trend line, or you know what? Let's just put a support or resistance. So I'm actually just going to choose a horizontal line. I mean, you can look to see where there have been some levels in oil. There's one in particular where it was acting as resistance. Whenever, I mean, it touched it up here. Maybe that was an opportunity if you saw that to sell. I mean, it touched it again. Here, the third time when it tried to, it touched this level, it broke through. And now what people might say is this is now going to be a support level. Again, I'm not telling you to buy, sell, or hold, but that's kind of how people use support and resistance lines. Maybe oil will just kind of support here and bounce off of this periodically. Maybe it'll do it once, maybe it'll do it twice. I mean, it looks like it did it once and it's kind of doing it twice. The third time, it might just break through, at which point it would become resistance again. But it's nice for you to be able to do that on your charts with pre-built indicators and drawing tools for you to customize your charts however you see fit. All right, I think that's kind of what I wanted to go over with knockouts. I think hopefully you understood that. Again, if you had any questions, please type them into the questions box. And I hope you're keeping Nelson busy there with your questions, because now I'm going to go over to binaries. Which is where people tend to, when they come to Nadex, a lot of times, that's actually what they're looking for. And binaries are definitely different than knockouts. Knockouts, you are trading the price, and it's not an all or nothing situation. If you buy it and the price goes higher, you can profit. If you sell it and the price goes lower, you can profit. If you're wrong, you would lose, and you have money at risk. But you know what your risk reward levels are when you're in there. And when it settles, if it hasn't touched one of those lines, your potential profit or loss is the difference between where you entered the trade and where it ultimately settles. Binaries, on the other hand, are all or nothing. All right, now for binaries, I'm going to go ahead and let's just use oil as an example. And I'm going to start with oil, and then I'm going to show you where you get a lot of price action. And it can get pretty exciting, and you will see how it can get pretty exciting. Notice for binaries, we've got different commodities. We don't have knockouts on everything. Again, a lot of people come here and they trade the indexes. You know, they have an opinion on what the market's going to do, so they'll trade the S&P 500. And we have different time frames. You know, we have 2-hour contracts, we have daily contracts, we have weekly contracts. Um, we do have shorter term contracts, and that's where I will probably finish because it's kind of fun to watch that happen. But we've got 5-minute binaries on currencies. I mean, these are very short term, lots of price action, and we have 20-minute contracts on the different indices. But because those can be pretty volatile in price movement, when I'm giving an example, I'm going to stick with the weekly contract for now on crude oil. And when I click on it, you'll see that there are a variety of choices. I am going to pick one of them. All right, here we go. And I clicked on sell. I'm going to hide that. What is a binary? A binary is a yes or no question. And the contract itself will either settle at 100 if the answer is yes, or the answer to the question is true, or 0. So it either goes to 100 or it goes to 0. And what are we talking about? We are trading the probability that at expiration, this question will be true. So right now, and this is this is a demo environment, so I can't totally attest to the prices at the moment. But let's say I thought oil was not going to finish higher than 32.75. Actually, let's say I thought oil was going to finish higher than 32.75. It's already higher than 32.75, and it's been rallying. And what the market is telling you is, if I look at the middle of the bid-ask spread, it's around 72. The market is telling me there's a 72% chance, or currently the probability is 72%, that oil will finish higher than 32.75. If it does, this contract goes to 100. It settles at 100, and your profit or loss is the difference between the probability that you bought or sold and whether it goes to 100 or whether it goes to 0. If it does finish above 32.75, and again, I know what my risk reward is going in. So just for an example, I'm going to do 73 since it's right between the market. If the market's saying there's a 73% chance that oil will finish higher, and notice on the chart, it shows me in blue where oil would have to settle for this to be true. Okay, I need oil to settle in this blue range for this to go to 100. If I bought one of these, I would be risking $73 to potentially make 27. All right, because the contract, if this is true, and at the end of Friday, oil finishes above 32.75, this contract goes to 100. It settles at 100, and I make the difference between the 73 that I bought up to 100 is $27. Now, if since I bought it and I paid 73 for it, if oil settles below 32.75, the contract goes to 0 and I lose what I paid for the contract. Now, if I thought oil was going to settle below that, I thought this is crazy. Oil, has rallied, it's going to go down. I could go the other way and I could sell one. And again, let's just pick middle of the market here. If I were to sell one at 73, all right, if oil stays above 32.75, all right, this contract would go to 100 and I would lose the $27. But if oil were to go down and settle below 32.75, this contract would go to 0. I sold it at 73. I stand to make $73. All right, now, again, you're trading the probability of whether the question is going to be true or false. Now, I just did oil. I would like to take a look. I mean, this is where a lot of people, let's take a look at the daily S&P 500. Let's pick one that's right here at the money. And I'm going to, you know what? We don't need a 5-minute chart. Let's give ourselves a little bit more time. That's kind of a, okay. And I'm going to, maybe we could do more than give it 30 minutes. Maybe 5 minutes, maybe 5, 10 minutes is fine. Okay, there we go. a 10-minute chart. Okay, I'm going to go and hide this again as well. And, I want to zoom in on this chart so we can actually see this a little bit better on how these binaries move. This is asking, all right, we know that the this is actually what I do. I did the Nasdaq. This is the US Tech 100. I apologize. I thought I did the S&P 500. This is the Nasdaq, US Tech 100. The indicative price is currently 94.62. All right, and the question is will it finish above or below 94.64? We are right here at the money, or where it's roughly a 50-50. We actually are watching the Nasdaq go down as we speak. So you're watching the price. You can actually watch the price of the contract go up or down um, as the price of the Nasdaq index ticks. I mean, it's right now you can see we're right here, 94.64, and we're 94. The indicative price is basically 94.64, and the market's giving you a 50, slightly higher than 50% probability that it will, by 4:15 today, finish higher. So if I thought the Nasdaq were going to continue going higher, all right, I mean, it just sold off some, and maybe it's going to bounce here. Um, if I thought it were going to stay above here, I could buy it. And if I, again, I want to make this a limit. Let's just pick 58 here because it's a nice round number. If I thought it were going to continue to go higher and will settle above 94.64, because I paid 58, that's my maximum risk because it could go to zero if it settles below. But my profit is, it goes to 100. My potential profit is 42. So again, with binaries, I am trading the price of the underlying asset, but it's couched a little differently. I'm trading the probability whether something is going to happen or not. Do I think this is going to finish higher or lower? I make a prediction. Now, this is right at the money. Let's move away. Let's go a little higher, and, do I think it can go? I mean, there's all the way up here at 95.36. The market is only telling me, let's go ahead and click on that one just for an example. The market is only telling me there's only a 15% probability of it going up to 95.36 and finishing above there. It's a very low probability play, but let's go ahead and put 15 in here. If I thought it were going to rally, I could try to buy one. Let's go ahead and put a 15 in here. All right. So when I did that, all right, I think maybe the Nasdaq is going to finish higher today, and it is going to bounce. Notice there's my 15 bid. It's a low probability. I'm only risking $15, but I need it to finish above 95.36. If it does, I stand up to make 85 because the contract would go to 100. Now, here's where I like to state this again. Just because there's an expiration associated with the binary doesn't mean I have to wait till expiration to see what happens. If I want to get out of the trade early, I can. So for instance, in this example, if I were to somehow buy one at 15 and the market were to rally and the Nasdaq were to start heading up towards 95.36, you would see the probability here also go higher. And if it actually made it to 95.36, let's say in the next hour or so, the probability around that would probably be closer to 50-50. And I could just sell out of the contract for a partial profit instead of waiting to see what happens at expiration, where it could still settle at zero or it could go to 100. You've got to make those determinations on where you get in or out of a trade. But when you do it, you know exactly what your maximum potential loss is and what your maximum potential profit is before you get into the trade. It is all defined risk. Now, I mentioned to you that I was going to show you a little bit more price action, and this is where I think a lot of people like to trade in binary options because they want to see it move around. I am going to go to these 5 minutes. And I'm going to pick a currency. Let's just go ahead and pick the Euro US dollar. And this contract settles in 3 minutes and 46 seconds. And I'm going to go ahead and just click on one. Let's go ahead and hide this. Let's zoom in on this chart a little bit. Wow, it's been moving around quite a bit. Okay, here we go. Maybe let's go to even a 1 minute chart. There we go. Let's give ourselves a little bit more price action in the chart because it's all right now. This contract, I am asking, will the Euro US dollar finish above 109.77? Oh my gosh, this was right around 50% when I opened this up, and it's the Euro is US dollar is selling off. Notice how quickly this dropped from around 50 when we or 40 when we started. Now it's a very low probability, and this 109.75 is oh wow. I mean, wow. I mean, we're watching this in real time. There's still 2 minutes and 44 seconds. It's almost like watching a horse race. And what's the probability that this now it's ticking back down? Let's pick this one here. It's selling back off, but it's still above 109.75. You know what? I think it's gonna go higher. I'm gonna buy one. All right, so I just bought one, and look at that. It went straight through it, and I was wrong. I mean, for the moment, um, the probability is now dropping. It had a 50-50 probability. Look at this. I mean, I've only got 2 minutes and 8 seconds for this to come right back. You want to see price action. The binaries, they're all or nothing, and it's the probability that the answer is going to be true or false. I bought one at around 50. 55. It sold straight through there. I've still got a minute and 48 seconds to see what happens. If it pops back up above 109.75, it'll settle at 100. Now I remember I paid 55 and it's rallying back up here, and we're back into the range where I bought it. And I really don't know what's going to happen here. And we're watching this real time. Let's pull this over here so we can actually see a little bit more. And there's still a minute left, and we're kind of hovering here. You know what? Maybe I'm not comfortable with it. Let's just go ahead and get out of it. And you know what? Um, I did. Did I think. Do I have a position? Oh, I do have a position. Let's just go ahead and. Well, it's rallying back up. What do you think? I don't know. I mean, this is the crazy part of it. I'm gonna go ahead and sell it. I don't know if for whatever reason, I took a loss. All right, I took a partial loss because there's only 49 seconds here to see what's going to happen, and I mean, you can see how the probabilities move very. And look at that. I'm kind of glad I did. Um, because, and again, this is not real. This is all in a demo environment. Remember, this is for educational purposes only. But you can see how quickly the price action on these binaries, they settle at 100 or they go to 0. And that's it. And then the contract settles, and I still don't know what's going to happen here. There's still 20 seconds left. And what ends up happening is you go into the last few seconds because no one knows what's going to happen. No one wants to trade them because there's just too much risk in the last few seconds. And that's it. We got 6 seconds, 5 seconds. And it is, and there it is, the horse race ends. It settled below this 109.75 went to 0, and the one below it went to 100. And what happened? I mean, that one expired, and we just started a new 5-minute contract. All right, this is the new 5-minute contract. When I click on it now, notice that we've now got 4 minutes and 38 seconds. So if you're looking for price action and excitement, binaries in the 5-minute world can be pretty exciting, and the probabilities move pretty dramatically as you get close to expiration. But a binary is an all or nothing proposition. It either goes to 100 or it goes to 0. And again, just like all of our other charts, you can on any of these put on some of your technical indicators here. I'm going to go ahead and put a Fibonacci on here, and you can kind of fit fit it to your, and look for support, resistance, retracement levels. People do technical analysis on this, but there is a lot of price action in the binaries as they approach expiration. With that, I think that kind of covers knockouts, binaries. I did some navigation on the chart on the platform on how you can use the charts, on how you use order tickets, clicking to buy or sell, managing your positions and your orders down below. I hope that you've been asking Nelson a lot of questions. All right. And if you have any other questions that we didn't get to, I would encourage you again. We are here to help you at Nadex any way that we can. There is that chat functionality on the site, and I would like for you to recall that we have a phone number and customer service at nadex.com. You can email us. We are here to help. And as a parting shot, I would like to remind you we have the virtual education summit next week, where we'll be doing a deeper dive into all the things that I talked about today to introduce you in this introductory session. I hope everyone is staying safe in these crazy times. I hope everyone is staying sane. And I would like to wish you all good luck in the markets. Thanks for joining today.